Pleasure again to welcome you all to the quarterly update on the results of Reliance Industries Limited. This quarter, we had more than our fair share of challenges, but I'm really pleased to say that we have record earnings again in what was a difficult economic environment globally. Our profit after tax on a consolidated basis at 11,262 crores was up 18.3% year on year. As far as PBDIT is concerned, we reached another landmark and it crossed 25,000 crores, up 15.5%. So we are now tracking, hopefully, a 1 lakh crore per year EBITDA target on an annualized basis with this quarter's performance. It was also great to see that all our businesses did well. All of them showed robust growth in earnings and margins. Our retail business hit a new high in terms of quarterly PBDIT of 2,322 crores, up 67%. And our digital business also established a new landmark with quarterly EBITDA crossing 5,000 crores and is up 48% year on year. Both of those, as you will agree, are sterling numbers showing really sharp growth in this past 4 quarters. Our consumer businesses now account for over 33% of consolidated EBITDA. 2 other comments I would make is that the capital expenditure numbers in this quarter are about half of that a year ago. So as we had said earlier, our investment cycle is now coming to an end with all the projects in our energy business close to completion and the major investments in our network for our digital businesses also being made. We also took strategic initiatives across all our businesses to strengthen them and create new platforms for growth. With that, let me quickly recap the highlights of our energy business. Higher EBITDA than previous quarter, coming on the back of a sharply improved GRM in our refining business and highest ever volumes as far as our petchem business is concerned. So GRM is up to $9.4 per barrel in this quarter as compared to 8.1 in the previous quarter. Petrochemical production at 9.9 million tons is also significantly higher. We also were really happy to see demand revival in both polymers and polyester in the domestic market. Highlights of our consumer business. Jio is now the undisputed leader in India in both the number of subscribers and in terms of revenue, with over 350 million subscribers as of the quarter end. As I stated earlier, we achieved a very important milestone of 5,000 quarters of quarterly EBITDA. Our EBITDA margin also improved to 41.8% and has been improving consistently ever since we launched services. Over the year, we have had very strong customer engagement and traction. And in terms of data traffic growth, it's 56% year on year, and voice growth is 52% year on year. In terms of our retail business, quarterly revenues hit again an all-time high, and also another milestone of over 40,000 crores in quarterly revenues were achieved. All our main consumption baskets of consumer electronics, fashion and lifestyle, and groceries exhibited not only growth but also margin improvement in this quarter. Our retail quarterly revenues have grown 7 times and EBITDA 10 times in the last 14 quarters. That is truly remarkable growth. We are probably the fastest retailer globally to get to $20 billion equivalent in revenue terms, and at 8,000 stores, we operate the largest number of consumer electronics stores of any retailer globally. A quick recap of the macro environment that we operated in. Oil prices were volatile, trending down, and finally the average price was 10% below the previous quarter. Reflecting a slowdown globally, the demand for oil is expected to grow only 1 million barrels per day this year as compared to 1.3 million barrels. The rupee started the quarter relatively stable, but finally ended up depreciating by 2.5% in this quarter. And as far as the refining markets were concerned, the competition for heavy crudes was very intense, with issues in both Iran and Venezuela, and that impacted refining margins to some extent. In India, as I said, we were good to see polymer demand up 5% year on year and polyester demand up 9% year on year. The demand for transportation fuels was a bit muted at 2.6%, but it was good to see gasoline grow at 8%. In our energy business, we took 2 important strategic initiatives. As you all probably know, we entered into an agreement with Saudi Aramco in which they would take 20% stake in our oil to chemicals business at an enterprise value of $75 billion. We also entered into an agreement with BP to form a joint venture around fuel retailing and aviation fuel business in India. So these are 2 big steps and 2 big partnerships with global majors and leaders in our energy business. If we look at the performance of the energy business, refining EBITDA at 5,659 crores was sequentially higher simply because of the improved gross refining margins. Petrochemical EBITDA at 8,927 crores was up 1.3% quarter on quarter, despite record volumes, primarily because of softness in some of our key products. At the same time, we are seeing the benefits of our business model, which is around a highly integrated refining and petrochemicals assets. So we benefited in this quarter by the improved spreads in both gas oil and gasoline. We benefited from the light cracking, from sourcing ethane, and from the fact that integrated polyester margins made up the slack in both paraxylene and PTA margins. In our consumer business, the strategic initiative that we announced was a partnership with Microsoft to form a new alliance, and this is aimed at providing Microsoft cloud-based solutions to Indian SMEs. We think this is a big step in further developing the digital ecosystem in India. In terms of our performance, as I said, the subscriber base at 355.2 million subscribers at the end of the quarter, gross adds of 31.6, net adds in excess of 24 million. So the subscriber addition momentum continues unabated quarter after quarter. Despite the larger consumer base with varying data plans, the consumer engagement is really satisfying. We are now seeing usage of 11.7 GB per month in terms of data and voice consumption of 789 minutes per month. In terms of EBITDA, got up to 5,166 crores, up 45% year on year and up 10.2% quarter on quarter, with an EBITDA margin of 41.8%, the highest that we have achieved. Our retail business is growing faster than any other player in India. It's expanding across geographies, across formats, and across verticals. Record retail EBITDA of 2,322 crores, up 67% year on year and 13.3% quarter on quarter. Our retail footprint is now nearly 11,000 stores, 24.5 million square feet, and presence in over 6,700 towns and cities. We also added a record 337 new stores in the last quarter. With that backdrop, let me now talk about our quarterly financials on a consolidated basis. Revenue was down 5.3%, primarily because of 10% lower crude prices, and of course it was made up to some extent by the higher revenues from our consumer business. So when we look at the revenues from our digital and retail businesses, this quarter's revenues were nearly 57,000 crores, 56,820 to be precise, up 7% quarter on quarter. PBDIT at 25,820 crores, up 5.4%, and net profit, which, as I said earlier, is a record at 11,262 crores. Net debt stays flat at 157,000 crores. Looking at our refining and marketing segment now, revenues were down 4.4% because of lower crude prices, but EBITDA was up 9.8%. These are both figures relative to the previous quarter because of the higher gross refining margin, higher diesel cracks, higher gasoline cracks, and a GRM which jumped by $1.3 per barrel from 8.1 to 9.4. Gasoline was up 56% in terms of margins this quarter, from an average of 7.5 to 11.7, and diesel was up from an average of 13 to $16.2 per barrel as the markets are adjusting for the new IMO 2020 regime. In terms of our petrochemicals performance, revenue up 2.5% quarter on quarter at 38,538 crores. Production up 13.2% from 8.7 to 9.9 million tons with the restart of our facilities after turnarounds. And EBITDA up 1.3% to 8,927 crores. So basically, EBITDA margins were slightly lower and revenue was flat despite higher production. If we look at our key products, that tells the story. Margins in polypropylene were down nearly 44% simply because of higher input costs. Margins in paraxylene were down 13%. New capacity in China which still has to be absorbed within the market. Let me now briefly touch upon our upstream performance. Revenues down 14%, primarily because of lower realization of both crude oil and gas. Domestic production is flat at 11.9 BCF during this quarter, and our production in the US is up by 12% to nearly 20 BCF in this quarter, as new wells both in Marcellus as well as Eagleford have come on production. Our development project for our cluster is proceeding well, and it looks a high degree of probability that we would be able to get the first gas by the middle of next year. Let's look at the numbers in retail. Revenue at 41,202 crores. It's basically expansion of both stores as well as improving like-for-like sales in existing stores. Revenue up 8% quarterly. EBITDA up 13.3% quarterly, by nearly 150 basis points over a year. Store count goes up by 337 to 10,901. And we added 1.5 million square feet of trading space to 24.5 million square feet now. The milestones in this quarter are both in terms of revenue, 40,000, in terms of EBITDA margin, and in terms of number of stores opened in one quarter. Another important metric is seeing the footfalls in a quarter. This is again a new milestone with over 150 million footfalls in this quarter in our stores, an increase in loyalty customers to 108 million, which is up nearly 48% year on year. So not only are we seeing more footfalls, we are seeing more footfalls from loyal customers, and that number continues to grow. Our approach here is fairly straightforward. We are trying to provide wider choices to consumers. We are having a wider portfolio of store brands offering complete value proposition, and we are growing both in geography as well as the products that we offer in our stores. Finally, a look at the numbers in Jio. Subscribers grow by 7.2% in a quarter from 331 to 355 million tons. Exit ARPU quarterly is 120 rupees. Gross revenue is up 5.8% quarter on quarter at 14,555. And EBITDA is a new record at 5,166 crores, as is EBITDA margin at 41.8%. Net profit at 990 crores. Data traffic 12 billion GB in a quarter. Voice traffic 813 billion minutes in a quarter. Both continue to grow quarter after quarter, showing stronger levels of customer engagement on our network. It's also a matter of great pride for us to share the fact that Jio is now the second largest single country operator in the world with a subscriber base of 355 million. All this in exactly 3 years from launch. We continue and capacity of the network to sustain the engagement that the customers are having with us, both in terms of download speeds, network availability, and also the churn at the Jio network is the lowest in the industry. Another big step that we have taken in this quarter is really launching Jio Giga Fiber across 1,600 cities where the service is being launched initially. We've received tremendous response for it, and also a lot of people are registering to come on and get the new Jio Giga Fiber services. With that, let me spend a minute on summarizing what we have talked about. We continue to build our consumer businesses. They are already world scale, and they are growing faster and becoming leaders not just in India but also global stature and size. The strategic partnership with Aramco is an important step for our energy business and highlights its value to all stakeholders. We think that the IMO regime will be positive for refining business in the next couple of quarters. And as far as our petrochemicals business is concerned, we are going to continue to benefit from the growth of demand in India, as well as the optionality that we have in feedstock. That brings me to the end of my presentation today. Thank you all very much for listening in. And